As Bed Bath & Beyond continues to slump on, is there any hope for the stock in the future? Hi again everyone, hope you're all doing really well. Today I'm here to talk again about Bed Bath & Beyond stock, ticker symbol BBBY. So Bed Bath & Beyond has been in a precarious financial situation for quite some time now, and recent developments have only added to the uncertainty surrounding the company's future. Firstly, let's talk about the recent capital raise announced by Bed Bath & Beyond. They are raising funds from Hudson Bay Capital Management, an institutional investor, in order to stave off bankruptcy. However, the deal is very unfavorable for existing shareholders and may not be completed in full. If that happens, the company will once again need to scramble in order to keep the lights on. The wipeout risk remains very high for Bed Bath & Beyond, it seems. Even if they do secure financing, it's questionable whether this will lead to a turnaround given these bleak prospects. One thing is clear. While shares trade at a low single-digit price level, they are far from a bargain. Even if they secure financing, it's questionable whether this will lead to a turnaround. Given these bleak prospects, one thing is clear. While the shares trade at a single-digit price level, they are far from a bargain. In fact, any investment in Bed Bath & Beyond stock at this point carries significant risks. The dilution of the stock is a major factor in this risk that we're talking about. When a company issues new shares, it dilutes the ownership of existing shareholders. This means that each existing shareholder now owns a smaller percentage of the company, and their share is worth less based on the asset value of the company. In the case of Bed Bath & Beyond, the deal with Hudson Bay, the institutional investor will receive preferred stock that they can convert into new common shares at a discount. Hudson Bay can then resell these shares, locking in profits. The dilution of the stock also has implications for any potential short squeeze, which may be one thing some retailers are hanging on for. A short squeeze occurs when investors who have bet against a stock by shorting it are forced to buy shares to cover their positions. This can happen when the stock price rises unexpectedly and the short sellers need to buy shares to avoid further losses. In the case of Bed Bath & Beyond, there has been speculation that a short squeeze could occur as the company has a high short interest. However, the dilution of the stock makes it less likely that a short squeeze will occur as there are more shares available, which would make it harder for the stock price to rise sharply. So what would happen if the Hudson Bay capital raise is not complete in full? It could have serious consequences for Bed Bath & Beyond. The company would need to find alternative sources of financing just to stay afloat, which could be difficult given its distressed financial state. If it is unable to secure financing from other deep-pocketed buyers or attract retail buyers for a secondary offering, it may need to file for Chapter 11 bankruptcy, a cloud which has been hanging over the company's head pretty much all year. In this scenario, existing shareholders would likely face significant losses as they would be last in line to receive any proceeds from the liquidation of the company's assets. Furthermore, even if the capital raise is completed in full, it's unclear whether this will be enough to turn the company around. Bed Bath & Beyond has been struggling for years, and the recent supply chain crisis and high inflation have only added to their woes. The company's fundamentals have deteriorated significantly, and it's questionable whether closing 150 more of its locations will have as much of an impact as the company expects it will. Moreover, the big box and e-commerce competition, as well as the alienation of its suppliers, stores' performance can continue to deteriorate. So in conclusion, Bed Bath & Beyond is a company that has been struggling for some time now, and with its underlying businesses deteriorating, even before the onset of the pandemic, the recent announcement of a dilutive capital raise to stave off bankruptcy has put the fate of the company largely in the hands of institutional investor Hudson Bay Capital Management. While the deal may provide the company with much needed cash, it is also very unfavorable to existing shareholders and comes with the risk that it may not be completed in full. This means the wipeout risk remains high for Bed Bath & Beyond, and it may have to file for Chapter 11 bankruptcy if they cannot secure full financing. So they're not out of the woods. Even if it does secure financing, it's questionable whether this would lead to a turnaround for the company with these bleak prospects. It's clear that while shares trade at low single-digit price levels, they are far from a bargain. Investors should approach BBBY stock with caution and consider alternative investment options, in my opinion. Anyway, not that this is investing advice, but I'd love to hear what others have to say about Bed Bath & Beyond at the moment, given what has taken place over the last few weeks and months. Let me know your thoughts in the comments below. Till next time, everyone. May the markets trade in your favour. Cheers.